my portfolio is down about $20,000 from its 12-month high, and I honestly don't care. On April 18th, 2022, my portfolio was valued at $155,000 Canadian. Today, on June 30th, its value is about $20,000 less, at around $136,000. This is a lot of money for anyone, really. It's a big chunk of change, but is it really lost? Well, yes and no. See, this is called an unrealized loss, which means the change in value is there, but I haven't really locked in the loss yet because I still own the assets in my account. If I were to sell today, then yes, I would be cutting my losses and there is no going back. But since I believe in my strategy in the long term, I'm not even considering doing that in the slightest. These are assets I've committed to for the long term of 10 to 15 years, not just a year or so. So for now, we're down. Here's an approximate look at my holdings here on trackyourdividends.com, and you can see basically all but VDY are in the red. And the only reason why VDY isn't in the red is probably because it was my first holding ever, and I got it at an extremely good price during the COVID crash. The entire market is in a downward slump right now, and this was bound to happen. Everything on the market is looking like this right now, no matter where you look. But if you zoom out, the same thing happened many times in the past. And where did the market go in the long term? Up. Always to new all-time highs. But the best part of all of this is that with my hybrid dividend investing strategy, it doesn't matter if the value of my portfolio is up or down. I am still making passive income every month through dividends and distributions from my holdings, which are mainly just ETFs and REITs that pay on a monthly basis. Here's a rough chart on my expected dividends over the next 12 months based on what I currently hold. It's important that I mention that because every single month this passive income is simply being reinvested back into the portfolio. And since virtually everything I own is down right now, I am automatically dollar cost averaging, bringing my average costs down over time by buying more each and every month. On top of those reinvested dividends, I'm also contributing funds every month. About 1/3 of my paycheck is deposited into my investing account, which I then use to purchase even more of what I already own. Again, at a lower price than what I already own it at, which brings down my average costs even further. I'm playing the long game with money I've earned over time that I don't need now. The other 2/3 of my paycheck goes towards any other expenses I have on a monthly basis and keeps my emergency fund topped off, should I need it. I also have no high interest debt to worry about either, which is essential to tackle first, by the way, if you're just starting to get into investing. Always get rid of debt first, then build an emergency fund, and then once you have done those things, you can hit the like button and start investing with the leftovers. And if you're just getting started with investing, you can check out this video where I go over how to invest in Canadian stocks for beginners. So head on over and I'll see you there.